In this video, we're going to be talking about account classifications. I have a list of accounts, and for each account, we're going to discuss what is its classification, and that means type of account. What is its normal balance? Is it a permanent account or a temporary account? And which financial statement will we find that account? So let's start with classification. So each account is a specific type. So we have assets. Assets are things that we own. Liabilities are things that we owe. And owner's equity are contributions the owner has made to the business or any net income they've left in the business. So I always like to explain to students it's like what the business owes to the owner or what the owner has available to be able to deduct from the business. Next, we have the drawing account, which is also called owner's withdrawals, owner's draws, or owner's drawings, and that's when an owner takes money out of the business. We then have revenue. That's when a business earns money either by selling a product or performing a service. Costs, that's the cost of the product that we sell. And expenses, those are the expenses that help us earn our revenue. They could be rent, utilities, things such as that. So that is how we're going to classify each account. And then the normal balance. So what is the normal balance? And we'll explain those as we go along. Is the account a permanent account or a temporary account? So I included a little note down here. And I said that asset, liability, and the owner's equity accounts are permanent accounts. We don't close them at the end of the month. They always have a balance in them. They may have a zero balance, but they always have a balance. The accounts that we close at the end of the month are the temporary accounts. So temporary accounts include the owner's drawing accounts, revenue, expense, and cost. So let's say, for example, we're looking at March and we've done some sales and we're going to put them in that revenue account, the sales revenue account. We want to know how much our sales were for the month of March. So at the end of March, we're going to close that account. So it has a fresh balance of zero so that we can then begin to accumulate our April sales. So temporary accounts get closed at the end of the month or quarter or year, and permanent accounts are always open. And then we have our financial statement. Does it appear on the income statement, the owner's equity statement, or the balance sheet? And some accounts show up on both. Okay, so let's begin with cash. Cash, my favorite asset, right? It's something that I own, and so that is an asset. All assets increase on the debit side. They have a normal balance of a debit or they increase on the debit. And they are permanent accounts because, as I said below, asset, liability, and owner's equity accounts are permanent. And we will find that account on the balance sheet. All right, next is supplies. So if I have a storage room filled with supplies, right, it's something that I own. When I own something, it's an asset. As I said earlier, all assets have debit balances. All assets are permanent accounts, and all assets are found on the balance sheet. Okay, notes payable. Whenever you see that word payable, that means that we are going to pay for that later. Okay, so when we pay for it later, that means we owe something to someone. So that is a liability. A liability is when we owe. Liabilities have a credit balance. They are permanent accounts, and we will find them on the balance sheet. Next is accounts payable. We see that payable word again, so we know it's a liability because we're going to pay it later. We have a credit balance, permanent, and it's on the balance sheet. Next is owner's capital. Owner's capital is an owner's equity account. It has a credit balance, and it's also a permanent account. Now we will find owner's capital on two statements. It's going to be on the balance sheet and I'm going to abbreviate this, it's going to be also on the owner's equity statement. So the capital account is a really special account. It's also referred to as owner's equity, and it's always going to be in two places. Next, we have our drawing account. So that is the category or classification of drawing. Okay, so now let's think about this for a moment. Owner's capital is when an owner contributes money to the business, right? So they're going to increase. We're increasing our cash, we're increasing our owner's capital. When an owner withdraws money from the business, that is a drawing because they're taking money out. So that's going to have the opposite balance of my capital, right? Because when we take money out, we're reducing our owner's capital, so it's going to have a debit balance. It's a temporary account. We close it at the end of the month, and it will be shown on the owner's equity statement. Okay, so that one shows up on the owner's equity statement. Next, we have service revenue. That's money we earn when we sell a product or we perform a service. It's a revenue account. Now let's think about this. What do revenue accounts do to my owner's capital? They increase my owner's capital, so they're going to have the same normal balance as my owner's capital, which is a credit. It's a temporary account because we close it at the end of the period, and our income statement has all of our revenues and all of our expenses, and it tells us what our net income is for the period. Okay, so all revenue and expenses show up on the income statement, and they show us at the end of the month, did we earn money, and that's called a net income, or did we lose money, and that's called a net loss. All right, next we're on to rent expense. So expenses are things that help us generate our revenue. So we need rent to conduct our business. So as I said, it's an expense. Expenses decrease our owner's equity, or they decrease our net income. So they're going to be a debit. They're going to be the opposite. It's a temporary account because we close our expenses at the end of the month, so we can start fresh, so we know how much rent we had for that period. And all income and expense accounts are found on the income statement. Next, we have utilities expense. Same as our rent expense. It's an expense account. Normal balance is a debit. It's a temporary account, and it will be found on the income statement. So that is how we classify our accounts, and we have a list of them, the type of classification, what is the normal balance, is it temporary or permanent, and what statement will it be found on.